Right now, gold, yes, gold is having a moment. It is at an all-time high, even though the stock market is also at an all-time high. And that is not normal because usually people flock to gold when weird, strange things are happening, meaning the stock market is down, inflation is up, and things are unstable. But I mean, the economy is doing fine, at least according to the data. The economy grew at 3.8%. So, what is going on here? Should you also add gold to your portfolio? If so, how much and how do you exactly do it? Pros, cons, and everything in between. Let's go ahead and break it down. Let's first talk about why. What is exactly going on here? Because, like I mentioned, gold usually is where people go when things are unstable. Inflation, global conflict, and things of the like. Well, tariffs is one major reason. And if you haven't been paying attention, and again, gold has been up for a good chunk of this year, and tariffs have been a story for most of the year. So that's one reason as to why people are moving towards gold. So if that is still something that is on your mind, which, I mean, there was a tweet over the weekend that kind of shook the market, that might be a reason as to why you want to look at gold, and it's still a solid asset. And with that, we do have some inflation concerns. Now, there is an asterisk around the inflation concerns. We don't currently, at the time of recording, I'm doing this on Monday the 13th, we don't have any government data on where inflation is and when we're gonna get the next report and all that stuff. I don't know. I don't have any, hey, this is where inflation officially is. However, we know tariffs do increase the price of stuff. I think last time I checked, the price of beef was up like 50%. Okay, so people do flock towards that. The other reason, and I think this is the big one, is the fact that the US dollar has dropped. The value of the US dollar has dropped by 10% during the first half of 2025. That's the biggest drop we have seen since 1973. Outside of tariffs, outside of inflation, when the value of the US dollar drops, people run to gold. Now, we did discuss this on the channel right here. I don't think I talked about gold as a place to go to. Now it certainly is, and it's definitely picked up a whole lot of steam. Speaking of picking up steam, this channel has also picked up steam. To continue that steam going, go ahead and hit that like and subscribe button. Now, what does that mean for you? Now, because of the tariffs, because of what's going on in the economy and the fact that the US dollar dropped, the Fed has responded in a way by dropping interest rates, which people have also been concerned that that is going to destabilize the economy in some ways. So this has been another reason that people have flocked towards gold, which leaves you with a few good places to invest in given all of this context. So you've got US stocks, which again are at or near an all-time high, depending on what time you're watching. Then you have international stocks, which I've talked a whole lot about, which have a little less of chaos, I guess if you want to say that, and then obviously gold. But the question is, how do you invest in gold? Because you do not have the exact same options as you do with the stock market, where you've got index funds and you've got hundreds or really thousands of stocks, both here and abroad. So here are two ETFs, and I'm going to tell you about physical gold as well. They are very similar in terms of performance. At the time I'm doing this video, this one, GLD, is one gold ETF. It basically tracks the performance of gold. It's up 26% in the last 6 months and up 53% over the last year. Again, both of these gold ETFs are very similar. Both very similar. Feel free to research both. Also pay attention to those fees. So that is one way to add gold to your portfolio. The second way is to add physical gold. Now, there are several gold companies that will offer you a gold IRA where you are able to buy gold, whether it's coins, bars, whatever it is, and they will take it, ship it to a secure facility, and hold it there based on the federal government, and you cannot actually hold it in your home and classify it as an IRA. No, that's not a thing. But you can have it there, and it can be safe and secure and all that type of stuff. That is a way, and you can buy it, sell it back to the company and all that type of stuff. There's a way. There are lots of fees, or there can be a lot of fees, and there are some high minimums depending on what company you want to go with. Now, I have done a write-up with Business Insider a few years ago on that entire process, so I'm not an expert on the physical gold IRAs and stuff. I did write an article for Business Insider if you do want to learn more. And I'm not saying that sarcastically. I did write an article on it, but it's not like, you know, I don't have one myself, okay? If I were to add gold, it would be through an ETF. I believe it's cheaper, it's easier to get rid of if I want to sell, and it's like some of those fees, you know, $100 a year, must have a minimum of $5,000. It's a lot. Okay, that's just how I'm viewing it. But it also depends on how much money you want to have in it, how long you want to have it too. Now, the other piece of this is how much gold should you own. It's always going to depend on your goals, okay, and your risk tolerance, how long you plan on investing, and all that type of stuff. Most general cookie cutter recommendations say anywhere between 5 to 10%. For me, and I'm in my 30s, 10% feels like a lot, but the economy also feels like a lot. So if it were me, my personal portfolio, maybe like 5 to 7. Okay. Ray Dalio, he is a, you know, hedge fund investor guy. This is what he suggests. I'm gonna just put his recommendation here because I don't want to misquote him. So that's him. Okay. But I think that 5% is totally fine. Just, you know, having those alternative assets, or especially now, make a lot of sense. And having a little bit of diversification does make sense. So international stocks, obviously, you probably already own some U.S. stocks, and gold make a good, fair amount of sense. But especially now with the U.S. dollar, I'm not going to say falling apart, but with the U.S. dollar being down as much as it is, given what we know about the U.S. economy right now, gold is a very interesting place to be, but you always want to have it in proportion. Being too heavy into gold is a risk because you have to remember gold is what we call a commodity, meaning, you know, if you have a gold bar and I have a gold bar, ain't no difference between the two. They're not like computers or cars, they're true things or stats behind them to determine the differences. There is no CEO of gold. They are truly fungible, right? There is no difference between the two. So there can be some downsides. But right now, it's all up. That's not a guarantee that it's always going to be that way. But right now, things are looking quite up for gold, and I think it absolutely does make sense. If you want to know what else might make sense for your portfolio, you want to check out these videos right here.